Is Lord Davis, chairman of Letter One and former CEO of Standard Chartered, amongst many other things. Mervyn, good to see you. Thanks so much for joining us.
Nice to see you.
The last decade, whether we're talking European banks, Asian banks, US banks, could arguably be said to have been a bit of a lost decade for banks, certainly relative to certain other sectors on the stock market. Do you think the next decade will be quite the opposite?
Well, you know, as chairman of Letter One, which is a long-term investing company, we see from the variety of industries we're involved in, you know, the impact of the digital revolution, and that is affecting banks all over the world. You know, you look at the valuation of Stripe, you look at the valuation of Klarna. There's just so many new entrants encroaching into the banking industry. And I think, you know, with the impact of COVID, the digital revolution is going to speed up. And, you know, I still see huge value in their customer franchises across the world, but increasing competition for the industry.
So will only the tech-enabled banks survive or grow their share price over the next decade? And does that mean the bigger players are perhaps better positioned than the smaller players?
Well, I think if you're a small player and, you know, you're technologically savvy and you've got a good customer base, and you've got a modern workforce that really understand the changes going on in society, then you will do well. I think the challenge for the big players across the world is legacy systems. How do they handle that? But I think the other issue, which is, you know, you've heard lots of bank CEOs. I've been out of mainstream banking for over a decade, but I see it in Letter One. You know, the way in which you manage the culture of an institution has changed as a result of COVID, the way people work, the work-life balance. There's so many issues that are going to come out of COVID that are going to be on a CEO, not just multinational, but also bank in their intros.
I have a question on that note. Wilfred pointed out to me the work that you did in the UK starting in 2011 to get more women on boards and ended up doubling it in the years that you were there. But still, I think at what, 25, 26% of the FTSE. How do we double that number, especially as big companies here in the U.S. are grappling with those questions of how to include more gender diversity and racial diversity on their boards? Why is it not happening fast enough?
Well, I think, you know, look, if you're a chairman, a CEO, or a board member of any company, it doesn't matter whether it's public or private now, and you don't understand the impact of ESG on your business, then either the youngsters will leave the company or your customers will leave you as a brand. So for me, you know, ESG is a wonderful development. It's changing the way we look at capitalism. And as part of that, you have just got to be a diverse institution at the board table, but also right across the workforce. And I think one other challenge as a result of the digital revolution is that, you know, some years ago, you know, boards of directors, the youngsters in a company would be looking upstairs for wisdom. And today, the boards of directors are looking downstairs to the youngsters to see exactly what's going on in society because it's so fast moving. So it's not, you know, diversity and inclusion at the top of a company isn't just about ethnic diversity or male and female. It is generally also about ages. And I think that's quite a challenge for boards.
Shepard Smith here. Thanks for watching CNBC on YouTube.